Thank you very much. I'm pleased to take 10 minutes of your time to introduce our company. NioBay Metals, it's a very unique company because we're probably the only one that is, or there's just a handful of companies that are focusing on niobium. We're one of them. So, obviously forward-looking statement. Quickly, company profile. We're a Toronto Stock Venture Exchange company. We have a market cap of roughly $12 million Canadian, and with 45.7 million shares outstanding. On our shareholder base, roughly 50% of the shareholders are split along 5 entities, one of which is Osisko Gold Royalties, who have roughly 20% of the company. Urbanization is ongoing, and by 2050, over 10 billion of people, or 2/3 of the world population, will be living in an urban area. So what that means, and why am I talking about urbanization here? If we look specifically at the Chinese the urbanization in China, in 2018, 60% of the populations are living in cities. And by 2050, they expected that 80% of the population will be in urban area. So, so that will be a growth of 300 million people living in urban area. 300 million people is roughly 40 times the population of Hong Kong. So what will be the impact? Obviously, an ongoing needs for infrastructure project. And when we talk about infrastructure project, we're talking about high demand of steel. So there are some forecasts out there that are predicting that China steel production have already peaked, and the production should starting to decline slightly. But then you start wondering why, with all the infrastructure project in the pipeline, that steel production should starting to decline. So one of the reason why is because the steel that is getting, the growth in steel will be coming from what we call the high strength low alloy steel, which is steel that contains some alloying element, and some of them include titanium, manganese, vanadium, moly, and also a very important one is niobium. So niobium is not known for a lot of people, but it's a very critical element to be used in high strength low alloy steel or value added steel. So if we stick the focus on China, I have a graph here which present the niobium consumption in 2018. The size of the bubble is the consumption in 2018. So you can see that China is consuming about 1/3 of the world consumption of niobium, while North America and Europe are quite smaller in terms of consumption. However, the Chinese intensity usage, or the quantity of niobium per ton of steel produced in China, is around 40 grams per ton. While if you look at North America or Europe, you're about 3 times that level. So what that means is the Chinese steel industry is still still behind in terms of the quality of steel produced. They're producing some good steel, but the bulk of it is not value-added steel. So what's also interesting here, it's maybe early still, but India is starting to show signs to become a major end user for niobium also. So now that we know that niobium will be required for the future, now we're wondering where can we get niobium? And this is where it's quite unique, because right now there's just 3 producers of niobium in the world. 2 of them are located in Brazil, and there's the third one is located in Canada, in Quebec, actually. So those 3 companies is there's one Brazilian company that is privately owned, that is the market leader. It has the size, it has the grade, They got all the infrastructure needed to supply 100% of the world. But obviously, they're not interested to become the sole supplier because the end user will not be able to build up design steel knowing there's just one supply. So there's also two other producers, and one of them out of Brazil. The mine is called Catalao. It used to be owned by Anglo-American. Recently, China Moly bought the mine for $1.7 billion. There was also a phosphate asset that came with it. And the mine in Quebec, the NioBay mine, was sold 4 years ago for roughly $500 million US. So those are big numbers, and you're wondering why people are paying so much for those assets, because basically they're generating a lot of cash. So obviously, I'm here not to talk to you about the market of ferroniobium, but mostly here to talk to you about our project. So we have a niobium project that is located in Canada, north of, actually on the Ontario, on the northeast side of Ontario. What's unique about that deposit is that this deposit has been discovered in the 60s. So there's been over 4,000 meters of drilling that's been done in the 60s. A resource estimate of 56 million ton at 0.52 was released. They also did a full feasibility, was completed in 1969. So we acquired that asset 2 years ago, and it was dormant, and the owner was not even aware that they owned the assets. So what we've done is we've completed a resource estimate last year. So we have a resource estimate of 51 million ton at 0.52% NB2O5. It's a very shallow deposit. There's only 30 meters of overburden. The last hole, the deepest hole, was at 275 meters. So it's very shallow, huge potential to increase the resource. But with that resource, what that means, 0.52% NB2O5. So if we were to convert that resource in gold, we're looking at 6.5 million ounces of gold. All right? So if we compare our deposit with the NioBay mine, for instance, which is very similar. So in terms of tonnage, we're roughly about the same, 51 million ton. NioBay's got 60 million tons. We have a much higher recovery rate of 78%, while the NioBay mine has 68%. Our goal is to produce no more than 5% of the world market. So we're not going to design the mine based on the capacity. We're going to design it to be no more than 5% of the world market share. And this is key because we don't want to upset the big giant elephant, that's CBMM. So based on our forecast, consumption forecast, and based on the growth that will be coming not only from China, but from also North America and Europe, we expect to be able to produce 6,000 tons of niobium a year. So this is very similar to the NioBay mine, which we were told by one of the owner of NioBay recently that now the value of the NioBay is around $1.5 billion. And our company just has a market cap of 12. So obviously, we're very optimistic about the potential upside in terms of prices. So last one, we're all investors, so why should you invest in our company? Well, first one is management. We do have extensive knowledge in the niobium field. I've personally been involved for 15 years on the market side. Also, I'm a metallurgist, so I work also on the production side. We also have some people that have been involved in the design of the niobium mine, obviously the operation of it. I think we own the only valuable mining project out there. And the way we're looking at it today, that operation could generate easily $100 million of EBITDA per year if we compare it to NioBay. So, and niobium is a commodity with high margin. It is known and predictable pricing. What I mean by predictable pricing is the price do not fluctuate. It tends to remain quite flat and slightly increase. Long mine life, and also we're very supporting, like strong team, either technically and financially. Thank you very much.